Have you ever wondered how people seem to turn small investments into huge returns? It's not magic, and it's definitely not luck. There's a method to the madness. Whether you're just getting started, or you've been thinking about making your money work for you, today we're breaking down exactly how you can do it too. The best part? You don't need a ton of cash to get started. Whether you have $100 or $1,000 to start with, there are practical ways to grow your investments. So, let's explore 10 actionable ways you can grow your money, no matter how small the starting point. So, without further ado, let's jump right in. 10. Start with the right mindset. Before you even think about where to invest, you need to check your mindset. Turning small investments into big returns isn't about quick wins, it's about playing the long game. Think of it like planting a tree. You put in the effort early on, and over time, it grows into something substantial. Patience is key. If you're looking for instant gratification, this journey might feel a bit slow at times. But trust me, it's all about staying committed and not getting discouraged when things don't happen overnight. 9. Educate yourself constantly. The more you know, the better decisions you'll make. Start reading books, blogs, and watching videos, like this one, to learn about different investment strategies. Knowledge is power. And there's no shortcut to becoming an informed investor. You don't need to become a financial expert overnight. But the more you understand about stocks, real estate, mutual funds, or any other investment vehicle, the more confident you'll feel in making the right choices. Many people jump into investments without fully understanding what they're doing, but this often leads to regret. Instead of following the crowd or relying on tips from the internet, take the time to educate yourself. Resources are everywhere, free ones too. This education will help you build confidence and, more importantly, ensure you make decisions that fit your financial goals. 8. Automate your investments. One of the smartest things you can do to turn small investments into bigger ones is to automate them. When you automate, you make investing a habit, and that's crucial for consistent growth. Whether it's setting up a monthly contribution to a retirement account or using apps like Acorns or Stash to invest spare change, automation makes investing easy and ensures you stay on track. By automating your investments, you're able to build a portfolio over time without having to think about it constantly. Many successful investors don't worry about the day-to-day ups and downs of the market because they know that consistent investing will pay off over the long run. Think of it like setting up a savings account. Once you automate it, you forget about it and you watch your money grow. 7. Invest in low-cost index funds. If you're looking for a smart, long-term investment strategy with minimal risk, index funds are an excellent option. Index funds are a type of mutual fund or exchange-traded fund, ETF, that tracks a broad market index, like the S&P 500. The best part? They're low cost, which means you won't be paying a ton in fees. Over time, these funds tend to provide solid returns because they're diversified and track the overall market, so you don't need to pick individual stocks. Index funds give you exposure to a wide range of companies, which reduces risk compared to picking individual stocks. They're also a great way to invest in the market without having to do hours of research or guesswork. The key to growing wealth with index funds is to keep investing regularly, especially during market dips. Even if you start with small amounts, your money will grow steadily over time as the market does. 6. Look into dividend stocks. Dividend stocks can be a great way to turn a small investment into bigger returns over time. These are stocks of companies that pay you a portion of their profits regularly, usually quarterly. The beauty of dividend stocks is that not only do you benefit from the stock price increasing over time, but you also earn money while you wait through dividends. You can even reinvest those dividends to buy more shares, which leads to even more returns down the road. The key to dividend stocks is choosing reliable companies with a solid history of paying dividends. As you reinvest your dividends, your portfolio starts to snowball and your wealth grows faster. Even with small initial investments, the compound effect can make a big difference in the long run. So, keep an eye on companies with steady earnings, good payout ratios, and a history of consistent dividend growth. 5. Don't overlook real estate crowdfunding. Real estate has always been one of the best ways to build wealth, but many people think they need hundreds of thousands of dollars to get started. That's where real estate crowdfunding comes in. Through crowdfunding platforms like Fundrise or Realty Mogul, You can pool your money with other investors to fund real estate projects. Some platforms even allow you to invest with as little as $500. While real estate traditionally required large capital upfront, crowdfunding has democratized the investment process. These platforms allow you to invest in residential or commercial properties, which can generate consistent returns through rental income and property appreciation. As your investments grow, you might be able to start branching out into other real estate projects. 4. Explore peer-to-peer lending. If you're looking for an investment that doesn't involve stocks or real estate, peer-to-peer (P2P) lending could be a good option. Through P2P lending platforms like Lending Club or Prosper, you lend money to individuals or small businesses in exchange for interest payments. This is a way to turn small amounts into returns while helping others at the same time. The key with P2P lending is to diversify your loans. Don't put all your money into one loan or borrower, as there's a risk of default. Instead, spread your investment across several loans, which can help balance the risk and return. P2P lending can be a great way to generate passive income while helping people or small businesses in need of financing. Keep in mind that while the returns can be higher than traditional bank accounts, there's a bit more risk involved, so always do your research. 3. Invest in yourself through education and skills. One of the best investments you can make is in yourself. Whether it's learning a new skill, taking a course to advance your career, or even starting a side business, investing in your personal development can lead to huge returns. In fact, the best returns often come from leveraging your knowledge and abilities. By improving your skills or expanding your knowledge, you increase your earning potential and open up new opportunities. Small investments in education, whether through online courses, workshops, or reading, can pay off in the form of promotions, raises, or new job opportunities. And who knows, that side hustle you start could eventually turn into a full-time business. Investing in yourself not only grows your income, but also builds your confidence and long-term success. 2. Take advantage of tax-advantaged accounts. If you're serious about growing your wealth, tax-advantaged accounts like IRAs, individual retirement accounts, or 401(k)s are a must. These accounts allow your investments to grow tax-free or tax-deferred, meaning you can potentially save a significant amount of money on taxes while watching your investments grow. The beauty of these accounts is that they allow you to compound your returns without worrying about taxes eating into your profits. For example, with a Roth IRA, your investments grow tax-free, and when you withdraw them in retirement, you don't have to pay taxes on those withdrawals. Even though you can't always access the money right away, these accounts are one of the best tools for long-term wealth building. Starting with small contributions will build up over time, and tax-advantaged accounts are perfect for that. 1. Be consistent and stay focused. Finally, consistency is the most important factor when it comes to turning small investments into big returns. It's easy to get discouraged when things don't happen as quickly as you expect, but the key is staying focused and consistent. Whether it's investing regularly, sticking to your financial plan, or resisting the urge to sell during market dips, staying disciplined will pay off in the end. Set a clear goal for your investments, stay consistent, and monitor your progress. Even if you're only investing a small amount each month, over time, those small amounts will add up. Remember, the stock market, real estate, and other investments are a marathon, not a sprint. With patience, focus, and consistency, those small investments will turn into big returns. If you found these tips helpful, don't forget to hit that like button, share this video, and subscribe for more content just like this. Let me know in the comments if you have any other investment tips or strategies that have worked for you. Thanks for watching, and I'll see you in the next one.